Boom, boom. All right, welcome traders. Welcome. Hope everyone's doing well. Happy Monday. All right, Mondays are I don't know, our favorite day of the week, Monday. Why? Because it starts a brand new trading week. I love Mondays, guys. I love Mondays. Anyway, welcome. Welcome to another live Q&A session with Oliver Velez. Of course, my name is Oliver Velez, and I am here today to answer your questions. What these live Q&A sessions do, I try to have them every Monday. I can't always adhere to that schedule, guys, but I'm trying to do these regularly on Mondays, live Q&A Mondays, right? And what these live sessions do for us is give you the ability to absorb the content that I spend a lot of time making sure it gets out to you every single day, all right? And these sessions allow you to get any questions that might come up as a result of that content directly to me. You can address those questions directly to me. This will give a deeper meaning, give a new dimension or an extra dimension of life to the content. And so I'm very happy to do that. So I hope you guys have some questions for me. You can ask anything that your heart desires, anything that is related to the content that I put out here. Now, before I actually start taking your questions, I do want to remind you that this is all absolutely free. All right, guys, my team and I spend a great deal of time every single day making sure that you have something something every single day that is designed to make you a more sophisticated market participant, to raise your level of sophistication as a market player. And that takes a lot of time. It takes a lot of effort. It is absolutely free with no obligation to pay for anything. All I ask is that you comment, you like the videos, you comment on the videos, and that you subscribe and turn all notifications on. This will ensure that you miss absolutely nothing. And it will ensure that obviously when we have these live Q&A sessions, you have some very pointed questions to ask, okay? Anyone that you feel also that is in need of real, true, authentic trading guidance, trading education, trading information, send them here, all right? Send them here. There aren't many people in the industry, guys, who have 43 years, almost 44 years of trading experience under their belt, almost 38 years of professional trading experience. And I don't believe there's anyone in the industry who's taught more traders throughout the world than I have. So, all right, send them here, guys. All right, with that being said, guys, remember, like the video, comment, and of course, make sure that you subscribe to the channel. All right, it helps the algorithm quite a bit. All right. All right, so what have you got for me here today, guys? What have you got for me today? What is on your mind? All right, what is on your mind today? Let me see if you have any questions here. Kes Edmond has a question. He says, Oliver, how do we effectively identify state after the open, say at like 11 p.m., all right, or later after the Fab 4 is not relevant? Okay, thank you, sir. So that's a good question. So I'm going to repeat the question again. The question is, Oliver, you talk frequently about a trader always wanting to know what the state of their underlying item is, what the state of their stock is, what the state of their Forex contract is, Forex pair is, what the state of their futures contract is. Whatever you're trading, you should be able to identify what the state is. Now, most traders don't even know what state is about. Say, Oliver, what do you mean state? Well, there are two dominant states. A stock can either be in a very narrow, tight state, narrow, flattish, and tight. The best trades happen from narrow, tight states. Then you can have super wide states, a wide state, all right? This usually happens after an extended move up or down in your stock. All right, so a flat state, a flat narrow state is more like this, and then you can explode into a wide state. All right, so the question is, I know how to determine for a stock when there's a narrow or wide state at the open, but what about later? And the key to this is two moving averages. The two moving averages I've always told you is the most relevant. The 20 period simple moving average and the 200 period moving average. So look at me carefully. I'm going to show you a chart in just a second, but we've got to get conceptually the concept down, right? So think of this. You've got a shorter term moving average, the 20, and a longer term moving average. Moving average pairs work best when you pair them with a relatively short term one and a long term one, okay? So the 20 shorter term, the 200 longer term. Now, when those two moving averages are relatively flat and close together, all right? Now, it can be tilty a little bit, but just not like this, all right? So relatively flat and close together, you're dealing with a narrow state, no matter when that happens. At the open, later in the day, later in the afternoon, it doesn't matter. Relatively flat and close together, narrow state. The other thing is, if they are far apart, like this, they're far apart, or doesn't matter, like this, far apart, or like this, far apart. They can even be flat. Well, they can't really be too flat far apart, but you know what I'm saying. When the 20 and the 200's wide apart, that's your wide state. I don't care if that's at the open, in the middle of the day, at the end of the day. All right? And then, of course, you have the middle, which is more of a neutral state. So you can't say it's narrow, tight, and narrow, but you also can't say it's super wide either. That would be more of a neutral state. Now, neutral states are trending states up or down. Let me go to the chart so that you understand this concept, because guys, let me tell you this. If you can't identify correctly the stock state, you can't really get things right with any degree of consistency. This is one of the foundational principles of consistency. You've got to get the state right, because the state correctly tells you what kind of trade to make. And if you don't have the state right, you don't know what kind of trade to go to next. You don't know the next step, what kind of trade, and not knowing what kind of trade sets you up for irregular performance. All right, so let me go to some charts here. Let me show you here. All right, I'm going to bring up a chart, a 2-minute chart here of, give me a second. Boom. Let's go here. Okay. Now, what you should be seeing here, I just want to make sure I've got this on just want to make sure everything is okay. Very quickly. Boom, 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 boom. Make sure everything's okay. Okay, good. So, what you should be viewing right now is a chart of NVIDIA. I'm going to flip to the 2-minute chart, as most of you should know if you're following my work for any particular period of time. Guys, let me do something here very quickly here. I do want to bring myself up here. All right, I want to bring myself up here. So give me a second. I don't want to be invisible to you here. Give me a second here. Cut out. Here we go. Boom. There we go. Yes. All right. Good. Okay. Boom. Okay. So what you should be looking at right now is a 2-minute chart of NVIDIA. Now, what I'm going to do is go to the open today. All right. So I'm going to go to the open today. Now, watch this. Okay. Now, do you see the open? Wow. Check this out, guys. Smoke on this. Look at this state. Now, remember how I told you how to judge the state, right? You judge the state by whether both your moving averages, the 20, the blue line, and the red line, the 200, are relatively close together and flat. So do you see that right there, right? So here, the 20 and the 200 are relatively flat together and close. Okay? Now, from this close position, guys, from this tight position, your best trades come from here to the upside or here to the downside, right? So from this state, NVIDIA opens right in the desired location right there. You see? Boom. And OMG. My goodness. Was that an amazing explosion from a narrow state? Now, that's at the open. The question was, well, how do I determine the state after the open? Well, this is after the open. Look at your state. 20 is up here. 200's way down here. Now you're in a wide state. Okay? So narrow state here. Look at how narrow the space is. Wide state here. Look at how wide the space is between the two moving averages. So we went from narrow to wide. And all markets do, guys, is go from narrow to wide, back to narrow again. Sometimes they go narrow to wide down and back to narrow again. Now, what throws people with this, guys, what throws people is that the back to narrow is not always in the same spot. So let me show you, let me give you an example of this, right? So you might go something like narrow, boom, to wide, and then narrow again is kind of up here, right? And you might do another one. You follow what I'm saying? So the narrow states don't have to line up. Doesn't have to be over here. Okay? It can also, you can also get something like narrow state, boom, to wide, and it catches up. And you get the narrow state here again. You can also get this to the downside, narrow state, back to narrow state here, and boom, narrow state to up, and then narrow state all the way back down here. So the narrow states can happen anywhere. My point is that you must be able to identify, especially the two dominant ones, guys. You got to be able to identify, okay, I'm in a wide state here, I'm in a narrow state here. I'm in a wide state here, I'm in a narrow state here. I'm in a narrow state here. I don't care where you are in the day, the open, the middle of the day, the end of the day, you can still judge the distance between your 20-period moving average and your 200-period moving average. Now, let me just always remind you of this, guys, all right? Let me remind you of this. Listen to me carefully. The numbers of people, guys, the numbers of people that actually know this, very small. Consider yourselves elite, guys. Consider yourselves elite in this regard, okay? Consider yourselves elite in this regard just by knowing state. All right. Okay, what other questions do you have? I'm trying to read them here. What other questions do you have for me? Talk to me. Let's see. Thank you for what you do, Oliver. You are the best teacher. Thank you, Miguel. I appreciate that. Thank you so much. I'm reading your comments here. All right. M for Reels is asking, big fan. Thank you. What was your biggest hurdle and how did you overcome it? Okay. What was your biggest hurdle and how did you overcome it? Biggest hurdle. That's a good question, actually. What was my biggest hurdle? I would say that what I have struggled with more than anything else in trading, in my whole trading career, guys, I've struggled with this. I would say is taking profits too fast. Now, let me give you a little story regarding this, right? Taking profits too fast. You have to really be careful how you start in this business, because oftentimes how you start, if you stay doing what you started doing long enough, it seeps deeply in your trader DNA, and it's hard to get it out. It's hard. Once it's in your trader DNA, it's almost impossible to remove it, to get it out. You might be able to mitigate it. You might be able to come up with a few hacks if you don't like it to lessen the blow of this thing. But if you're doing something wrong early and you do it long enough and it's early in your development, it's going to seep into a level that will never be able to be removed. And this is why I try to catch traders as early as possible, because you can start wrong and it will be very hard to undo your wrong habits if they get too deeply rooted in your DNA early in your development, because you're the most impressionable when you're early, okay? And it saddens me when traders get hooked up with people or methods or approaches that are absolutely asinine, and they're building a very, very bad DNA for themselves, which will be hard for even me to undo. Anyway, I digress a little bit, but not much. Here's what happened. When I first started and I went solo as a trader, meaning not trading for a firm, and I went solo, I had a situation where if I were not profitable by a certain amount every week, my family didn't eat, period. Now think about that situation, guys. I'm either profitable or my family doesn't eat. I want you to think about that. So this puts a tremendous amount of importance and pressure on profitability. Now, the deal that I had with my backers, I did have some backers to go in solo in my career. Started off with backers. They backed me with capital. The deal I had was there was a certain initial amount that I did not have to share with them. This first initial amount of profitability was all mine. So on Monday morning of every single trading week, my goal was to get my amount that is not shareable with those that backed me. It was all mine. That was part of the deal. So I crawled my way to that level of profitability. So let's say it was $500, and it actually was. It started out with $500, and it went up higher. But so first, I would just let me get, my first goal was to get $800 to lock in my $500. So I want you to understand this. I'm going to get to the point in just a second, but it's important that you understand the story. Because I got the first 500 without having to share. Now we're going back 30 plus years ago, right? So I know those numbers seem small, but this is 30 plus years ago. So because I didn't have to share the first 500, I wanted to lock that in, but I had to go past 500. Because I did not have to share the first 500, I needed to go past 500 to give myself some downside cushion. So I always picked $800. So Monday morning, I just crawled my way as quickly as I could to 800. So I would grab $120 here, boom, in the bag. I would not, I just, if I had a takeable amount, boom, I'd take it, put it to the side. All right, here's $80, boom. Here's, oh wow, here's a $190, boom, take it. And so I took, and I took, and I took, and I took, and it's a takeable gain. I took, boom, 800, my family can eat. Now, I would not let 500, I got 800, I gave myself $300 downside. Do you understand? But I would never in a million years allow the market to take that $500 away from me. It could take 300 away, but that's all it would get. It would not get my family's food. Do you understand? And so what's my point here? The point is that because I did this so consistently and for a while, the snatching got into my DNA. It seeped into my DNA. Now, to this very day, I struggle. Struggle is too strong of a word. I'm still an early profit taker. I help mitigate that by being an incremental profit taker, which is something I teach you. I teach you to never sell everything at win one shot, or rarely, if ever, sell anything at one shot, because that is more of the novice gambling approach. One shot in, let's see if it works. One shot out, okay, I won the bet. That's not proper professional trading. So the incremental sell along the way satisfies both of my urges. So there's one urge here saying, take the gain, Oliver, take the gain. You've got a quick $4,000, take the gain, take the 4,000, take the 4,000. The other side says, you're always taking the 4,000 and you're leaving behind the 10. Just, why don't you let this go? So I've got two little voices in my ear. Take the 4,000. It's 2 minutes in and you got 4,000. Take the 4,000. You keep taking the 4,000 and leaving the 10 on the table. Let's stop this. Boom, 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 boom. So now I can take part of the 4,000 and satisfy this voice and let the other part go and satisfy this voice. So I help mitigate by splitting the baby. I don't try to solve my DNA. I feed my DNA a little bit, and I also feed this other desire to maximize my gains. Now, I will incremental sell in a lot of pieces because I play size. So I might incremental sell, I might have 8 or 9 or 10 sells along the way as the play is developing. So you saw NVIDIA, right? You saw NVIDIA run here. Give me a second here. You saw NVIDIA run here, right? And I might do something like this. Let me show you my incremental sell. I might do something like, boom, I'm in, okay? And I might do something like this, sell, see that quick sell, okay? But I will sell in a pyramid like this. So let's say this is my first zone play, okay? So I might sell, I'm at the tip of the pyramid. I might sell a little taste here and I'll split this in thirds, right? So let's say I sell 3 times in each box, in each part of the triangle. So I sell the beginning and toward the end, the beginning, middle, toward the end, the beginning, middle, and toward the end. So that's being an incremental seller. you're selling along the way more and more of your position as your profitability or as the play proves you more and more correct. Okay? Now, there's something interesting I want to tell you. This is very advanced for a size trader. When you are not a size trader, you can't do this. So what you must do is you must skip the first box, right? Let me show you. You can't take profits in the first box. I teach traders to initially not take profits in the first two and to start taking profits in the third one, okay? But then I start walking them down as they get better and bigger with size. Once they start playing more size, they can go to this box as well, all right? And when they get really big in their size, they can even go to the first box, okay? Now, notice that there is a space here. I'll do it in a different color. There is a space between my entry and the tip of that pyramid that there's nothing. If anything, this is my buy and add territory. You see? My buy in and add territory is the first zone. It is only after I get out of the first zone can I start taking profits. But you should not even take profits in the second zone. So in truth, there's zone 1. Let's do this. Zone 1. There's zone 2. Okay? There's zone 3. And there's zone 4. And so what we're trying to do, I don't know if I can draw this properly, guys, but what is that animal? You know. This is an elephant. I know I'm drawing terribly, but okay? But you see, guys, this elephant has 4 feet, right? 1, well, let's do it like this. 1, 2, 3, and 4. So this elephant going into NVIDIA goes into NVIDIA 1 foot at a time. Do you understand? 1 foot at a time. 1 foot in. 2 foot in. Elephant's halfway in. 3 foot in. 4 rest. Okay, so the elephant is completely in. That's the concept we're using with this count method, right? So you don't take profits when the elephant put his first foot in. That's ridiculous. All right? The first foot doesn't count. You shouldn't even take profits on the second foot. Now, you want to take profits on the third and fourth foot in, fine, but the best foot to take profits in is the fourth one. So I teach my traders to trade by these numbers, guys. Trading by the numbers works. I teach them this number-based system so that I can also correct them by this number approach, right? So I can say, look, you took profits on the second foot. What are you doing? Elephant's halfway in. Why are you leaving 2 other feet on the table? And it makes them understand it. It makes them get it, you know? We want to take profits as close to the fourth foot as possible. You understand what I'm saying? So anyway, I know that was a long answer, but I take these opportunities to sort of teach you some extra things as well. All right? Yeah. All right. Let's see. Mark says incredible. I appreciate that. Thank you. Ashutosh says, thanks, sir. Recently watched one video and it changed my entire view to see charts. Good. Thanks a ton, sir. Oh, okay. Thank you very much. I appreciate that. Thank you. All right. Nixon, you truly are the best trainer I've heard on YouTube. I appreciate that. Thank you. You probably are the only one who shares so openly all your strategies. Humble to be a part of this family. Awesome. Guys, I appreciate this. Thank you. Thank you. All right. Oliver, can you explain something about the premium on MSTR stock compared to Bitcoin? I think this is actually a bit more appropriate for a Bitcoin talk. But let me just throw out some basic things here, okay? Regarding MSTR, let me do that here. Give me a second. Okay, let's do this. Okay, so here we have MSTR. Now, MicroStrategy is a proxy for Bitcoin, right? And we'll go to a daily chart here. It is a leveraged bet on Bitcoin. Now, as a leveraged bet on Bitcoin, it will trade at a premium most of the time, almost all the time, because it's not just spot Bitcoin, it's leveraged Bitcoin. So anything leveraged is added juice to something, right? So the added juice, the added fuel, the added rocket fuel will always demand a premium, okay? Now, this premium is operating at about 1.5 to sometimes very close to 3. But let's say 1.5 to 2.5 times BTC itself. So the premium, if MicroStrategy has $16 billion of Bitcoin on the balance sheet, it's going to trade about 2.5 times. It's usually around here, 2.5 to 3 times more value than the Bitcoin. So $16 billion in Bitcoin on the balance sheet, but it's trading at $40 billion, let's say, valuation. That's a premium to the balance sheet, all right? It gets complicated here because there are other things aside from Bitcoin that you have to put into that premium. The ability of MicroStrategy to actually print money to buy Bitcoin, to its ability to get money for almost free through its strategies. That also is a part of the premium. A lot of companies would not be able to do that. All right. And so, MicroStrategy is always going to trade at a premium. And it will always outperform Bitcoin because it's leveraged Bitcoin. So if Bitcoin goes up 200%, MicroStrategy might go up 400%. You understand what I'm saying? The point is that you also have to realize that it works the other way. If Bitcoin's down 30%, MicroStrategy might be down 60%. So that premium, that extra juice is a reward on the upside, and it's a huge punishment on the downside. Which is why I believe that MicroStrategy is more of a cyclical play versus a long-term hold. That you will do better long-term holding Bitcoin, and using MicroStrategy as your juice to gain more on the bullish side. So it's a combo play. It's a cyclical play that you use with your Bitcoin versus a replacement for Bitcoin. And I'm just not a believer yet that it's just a true long-term hold. It's more like a juiced up miner that you play when it's the most bullish to play, and you sidestep or actually use it to hedge your Bitcoin holdings when it's during Bitcoin's bear market period. All right, but again, guys, I do have live Bitcoin talks. This is kind of more along the lines of something that we do a deep dive in on the live Bitcoin talks, okay? So let's try to keep it trading here. What else here? Let's see. What else? What other questions here? Boom, 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 boom. Okay. Why did Microsoft go wrong? Does anybody know the reason? Thank you. Microsoft went wrong. Let's see what's being said here about Microsoft. All right. Remember, your stock is never wrong. All right, that's one thing. A strategy or an approach you were applying to a stock might not have worked, but the stock is never really wrong. All right, but I know what you're saying. So let me see if I can maybe go back and see what you mean here by wrong. Okay. So guys, here's the open on Microsoft, and what you see here is that you've got wide states here. Okay. And here's your first bar of the day. Okay. The way I would look at this is that I would expect an initial move to the downside. It's a wide state, so I would predominantly be focused on more narrow states at the open. But you see this late day price activity from the prior day. All right. So by starting under that today, the bias initially, at least, is to the downside, right? If you started up here, the bias would largely be to the upside. But you start under yesterday's late day data and you produce red under. To me, the first move is to the downside. That's what the odds suggest. Now, that's not working, that's working. All right? Now, I wouldn't expect more down. I wouldn't expect a tremendous amount of downside because the down already started from yesterday. So if you think about it, look, it started from yesterday. So all you're doing is playing a late move from where the move started. Do you understand? Now, if yesterday was yesterday was dropping into the close, and all you're doing is now finishing that drop. Okay? Now, if yesterday wasn't dropping and it was doing this tight, narrow, fat state, now you expect more because this is the beginning of the move, whereas that here, the beginning of the move started yesterday. Here, the beginning of the move is starting today, so you can go further today. You understand? Because you started the move today. Microsoft started the move yesterday. So its downside today is limited. Does this make sense? Where a move starts, yesterday or today, matters. Right? You understand? Make sense? Are you picking up what I'm laying down? Yeah? It's not rocket science, right? It's not rocket science, right? Not rocket science. I know we're operating on a delay. I'm just waiting for some of your responses here. Will you make sense? You got this? Good. I see the understoods. Thank you, Nixon. All right. I appreciate it. Thank you. All right. Good. All right. Good. Don. Good. Carl. Thanks. All right. Uh, Great filibuster is asking, I think, a good question here. Oliver says, how can a trader know when they should quit or just take a break when battling a losing period of trading? Okay. When should you take a break? Now, taking a break and quitting are two different things. So I don't know if you are just mean take a break, take a breather, or are you saying when should a break versus just quitting forever be the choice? I'm not quite sure, but let me give you some thoughts here. Every loss and every losing period is not equal. You have to determine whether or not you are losing. Is this loss because I made a mistake? Or is this loss just because it's part of the trader math? You can't win 10 out of 10 trades all the time. Most of the time you can't. So out of every 10 trades, I am going to have some losses. So I just need to make sure those losing trades are not because of me. It's just because you can't win them all. So I want to lose correctly. I want to make sure that I haven't made a mistake. I've lost, but that's not because of me. That's just because of life. You can't win them all. Those are good losses. Those losses actually advance you. Those losses make you more powerful, make you stronger, make you more elite. Right losses, just like correct wins, advance you. You don't have to make money to advance. You can advance from a losing trade. Pull off the right losing trade, and that's another feather in your cap, bro. You understand? So don't poo-poo every loss. Losses are necessary the same way pain in life is necessary. Pain teaches us. Pain is a good thing. All right? You touch fire, you get burned, it's painful, you won't touch it again. Trust me. I promise you, you won't do it. Right? The pain taught you. Losses teach you, okay, I'm not going to do that I'm not going to do that again. So there are angels in a way. Okay? The other thing is, then you got the other category, losses that are because of mistakes. Identifiable mistakes. Man, I keep entering too late. I'm scared, I'm nervous, but I enter too late and I get slammed all the time. All right, that is a mistake. You understand? My God, I keep fighting the trends. Oliver tells me I should be shorting, but I'm always looking to go long even though the stock is under the moving averages. It's under the moving averages, and I look for the long, but I should be looking for the short. I'm getting killed because of this error. Identifiable errors. So now you've got two categories: losses because of math, not your fault, and losses because you're not doing the right thing. Okay? As long as you are able to identify these two groups, you should not be stopping. If you can identify correctly that this loss is not because of me, and this one, I made this error, there's nothing to stop for. It's when you're hemorrhaging money and you're totally off. You're just totally lost. I don't know what the heck is going on. You got to take a break. that's a sign that you are too close to the trees and you have lost sight of the forest. So stepping back, taking a breather, getting the purview once again of the parameters of the forest brings you back. Time does heal a little bit. You understand? So taking a break when you're just, I can't even figure out what the heck is going on right now. All I know is that I'm hemorrhaging, but I can't even figure out whether it's me, whether it's just the market, what. All right, take a break. All right, step back, take a break. You've lost the forest here. Okay? Now, you don't just take a break and think that freaking magic is going to happen. All right? Magic's not going to just fall from the sky because you have now taken a break. You have to do something during the break. So during this breather period, you take the Epic pen, all right? You see the pen that I use. It's called the Epic pen. Download it. It's free, okay? And what you do during a day or two of taking a break is you mark up in real time, if you can, on your charting. You mark up where I'm entering here 2 lots, boom. Do it with the pen on the chart. 2 lots here, boom. All right, my protection is here underneath the event, okay. I'm adding on this first color change, boom, adding 1 lot here, and write it in. Do not just do it in your mind. I want you to take the frickin' pen. If you don't want to do it with the EquiPen, you can do it with an actual pen and piece of paper, or you can do it on your cell phone. All right, I'm entering 2 lots here. But I like doing it on the chart because that's the closest thing to trading it real. As the bar is forming, I'm entering here, boom, 2 lots. Stop. Mental stop underneath the event. I'm adding on that first color change, boom, here, 1 lot. And there's no cheating this process because you do not know what's next. Do you understand? Now, when you're penciled, your live penciled trades, you start to get back into the flow. You're like, wow, I wish I did that one with my real account. Whoa, I wish this wasn't with the pen. I wish when you start to get a few of those, it's time to go back. Do you understand? You've regained your composure. You've taken a break. You've let that mental apparatus of yours relax a little bit. You've taken the risk out of the equation, allowing your system to relax, but you're still doing just enough to see your skill. You're not just going to the beach, which is cool too, but you're still in the game enough to monitor, have I gotten my composure back? You understand? And so every now and then, stepping back and going to this position when you're having a rough time can really be beneficial. The last thing I will say about this is that I've had some traders actually take a break in the opposite direction, which is take a break when they have gone on this incredible winning streak and their profits have mushroomed to this incredible level. It's like they went on this streak and they couldn't lose. And I've had to fight and convince traders, take a break. Take a break now. But Oliver, I'm winning, man. I can't lose. I said, that's why, just take a break. All right? What I found is that just like a stock can get so far away from its 20-period moving average, it's the further from its 20-period moving average it gets, the closer it is to a sharp decline. The further a trader gets into consistent profitability, just a bullish run, the closer he is to the disaster of his life. And so you can sidestep this cycle of yours through time. You understand? You are not the same trader after 15 wins in a row. I promise you. You're the trader at the 15th win in a row is not the same trader that placed the first trade in that sequence of 15 trades. Because the head is now like this. The care is different. It changes the trader a bit, you know? And so this is part of knowing yourself. You understand? Knowing yourself. Know thyself. That's the main reason we're here. And knowing yourself, knowing when you have gone beyond your statistical norm, I'm going to take a break. That's not being scared of anything. That's just being smart. And that break with the pen resets you. And a lot of traders can bypass that. They have to pull back. Markets go from narrow state to wide state. You're in a wide state. You're going to narrow, but you can go through narrow through time instead of through price or through profits. Giving back your profits brings you back to narrow. Giving back a portion of your profits brings you back to a narrow state. Or time can bring you back to a narrow state without giving back your profits. So just thought I'd add that. Cool. All right. Tom is saying, Oliver, do you recommend to check the higher time frames, the hourly, the daily, before you start trading? Give me a second here, guys. My watch thinks I'm running. I move my hand so much. Anyway, do you recommend to check the higher time frames, like the hourly, the daily, before you start trading with the 2-minute chart? Yeah, we do a very quick check on 2 bigger time frames above us. They don't stop us from the trade. They just advise us, is this trade if this trade on the 2-minute is in conflict with a bigger time frame, then we trade it smaller. If there is no conflict on a bigger time frame, then we play it normally or bigger. You understand? So I don't let a bigger time frame, a conflict on a bigger time frame. My 2-minute says go, and a bigger time frame says, not so sure about that. Then I will reduce my size. I'll still go. The 2-minute rules. The advisors tell me, all right, drop your size, or no, keep your size the same, or I would pick the size up on this one. Do you understand? So once again, I don't let a higher time frame stop the trade. I do let the higher time frame advise, should I do this with less? Or should I do this with more? All right, like that. Good. You're the best. Thank you very much. I appreciate that, TT. Okay. Let's see. Do I suggest graduating one program before attempting another simultaneously? No, not necessarily. So the trader's saying, like, so for instance, guys, we have training programs in both Forex and equities. Now, some traders will naturally just be better Forex traders. Some traders will naturally be better equity traders. Some traders will naturally be the same no matter what market they go to. In a way, there's no real way for us to really influence that. You have to find out where you are. But I have many traders that trade both markets. They are honing their skill in both markets. And I like this because remember, guys, when I started, there was no Forex market. The Forex market was exclusive to the central banks and governments and your too big to fail banks. throughout the world. But that market was not accessible to regular traders, regular market participants. This is a relatively new phenomenon that Forex opened up to the retail world, to the main street world, all right? If I had Forex, I believe my development would have been faster. You understand? Forex is 24 hours. So I have a lot of traders who are starting their trading day with Forex before the equity markets start. So they've got actually a portion of a day in before the day starts in equities. And I like that. I have some Brazilian traders that trade their market first. So the Brazilian market opens up about 2 hours sometimes before the New York market opens. So they get 2 hours of trading in. And then boom, they're ready to get another day in, another hour or two in when the US equity markets open. I like things like that. I like it. So if Forex were available to me, I would have been trading Forex and equities. I would have been doing both, honing my skills in both. And the ultimate goal, guys, is to be a global trader, to be able to trade any market, anywhere, at any time. That's where you want to be. You understand? You can specialize in one, but you want to be able to handle yourself in any market, in every market. I think that's the ultimate goal. All right? All right, cool. All right, guys. I appreciate it. I see a lot of your questions, guys. I wish I could take them all, but I can't. We've been going at this for how long? Yeah, we're going on this for a while. So 57 minutes. Okay. So that's about right, guys. So look, guys, I totally, truly appreciate you showing up. And over time, I will eventually get to all of your questions, I promise. We'll keep doing this, so keep showing up. Guys, please like the video, comment on the videos, not just this one, but the others. I know you're commenting here, but comment on the other videos. Help us out with the algorithm, guys. Make sure you subscribe to the channel. Turn the bell in the upper, I think it's the upper right-hand corner. Turn that to bell on to all notifications so that you don't miss anything. The goal is to every week take a step, every week take a step in your journey toward higher and higher levels of sophistication. I think that what we put out here on the channel helps you do that. And then I touch base with you when I can twice a week live through the Q&A and through Technical Analysis Thursdays. Tighten up, and that can be as part of your process. All right? And guys, don't forget, guys, if you think that you are ready for a more serious step in this, consider joining one of the programs. You should know where you can get that, right? It's usually in the descriptions, tradingolivervelez.com. Check it out. It might just be for you. All right, guys? Love you to death. All right, enjoy the rest of your Monday. And I'm going to try to see you on Thursday, guys. I'm going to try to see you on Thursday. I'll be out of the country, but try to see you on Thursday. All right? All right. Ciao for now, guys. Boom. Boom.